Now it should be okay, I think. Thank you, Stefan. Thank you, Emma. Thank you, Ahmad. Let me know whether now it's fine or not. The YouTube users and Facebook users as well. Is it okay now? Team, eyes.
Facebook's okay.
YouTube, Facebook is okay. So you're saying me. So I guess YouTube should be okay, but it's the same streaming software that we're using. So okay, yeah, brilliant, brilliant, brilliant. So we can finally start. So I will actually start, since it's FOMC. I will also share, obviously, dollar before I will brief you up, okay, before we go to actually analyzing the chart. I will brief you up on what happened yesterday, this week, how dollar got affected, what it means for FOMC today, and etc., and what scenarios we have in regards to the FOMC today. So as you already know, we had seen inflation yesterday from the US. So and it actually it shows that peak that we have seen in the previous month wasn't just a once off. So as you might already not know, since it was yesterday's news, the inflation in the US came much cooler than expected, so lower. So the headline was at 0.1% in November. The core was up at 0.2%, but both were much cooler with the, if I'm not mistaken, let me just be, let me just also have my calendar next to me. Yeah. Yes, with the year number, excluding food and energy, are 6% from the 6.3% in October. So a much, much cooler reading. And you see there is a slowdown, a decline. So it's another signal that it has peaked and now is smoothing, is slowing down. That this is actually good. Because in my, obviously not fully confirmed yet, but in my means that the so far efforts from the FOMC have brought some fruits, even though they are a bit delayed. So there is still that on the backside, that the central bank didn't act on time. They delay the increase in rates, whether they are overdoing it or not. So there are a lot of uncertainty and risk regards to the policy, to the inflation globally, but now we are referring to the US since we have the FOMC. What do you think about today's FOMC? Okay, just so in regards to, okay, good question. Let me share it so people can see your what you're asking, Diara de Dodun, and just to have it over there. So in regards to the FOMC, we also put a post earlier, and yesterday we also put a post discussing what are the possible scenarios for today's FOMC. But remember what we keep saying, that the yields, the Fed fund futures are pretty much showing what the markets at least is anticipated. Okay, but if we just on the one side, let's if we just emphasize on what the Fed fund futures are anticipate, especially after the inflation report, is that a 50 points increase will be delivered today. And that is something that is fully priced in, okay? Fully priced in by the market. So the chance of 25 points, so lower increase, is pretty unlikely, okay? Because let's not forget what the central banks and the Fed officials are on their or their comments during the final quarter of the year, what they are saying. Pretty much the chairman Powell repeated several times that they might reach as high as 5.1% next year. So for peaking the rates up to that level means that they will keep increasing rates slowly, but keep increasing rates. And also this is what we have seen the market pricing in, we have seen the market, the way the market performs, the treasury yields, the dollar index, the stocks, etc. It's clear that they keep trading and investing based on the perspective that the Fed will keep increasing rates. So as I said, for tonight, 50 point hikes is expected, and for the next meeting, that will be in February, 1st of February, we expect a 25 points move. Now, that I mentioned a lot. I emphasize a lot on what the Fed Fund futures, the market, what would they show in regards to the FOMC. Now, let me turn back and discuss a bit with you what else, what might be even more important than the actual points, that the actually interest rate hike. More important, and it's something that will be in the spotlight today, is obviously the press conference. So it's not okay. Obviously, whether they will deliver 50 rate hike or they will surprise the market is important, but key is also the press conference and the statement. Okay, and the dots. Sorry. So let's start with the dots. So dots are in the spotlight. Okay, the revisions, whether the revision will be up to 5% handle or not. So and as I said, the tone, the attention is whether we're gonna see the officials, Mr. Powell, its colleagues, to actually apply what they have to say, what they apply about the rate trajectory and the tone. Okay, so this might be more important, and it might be key drivers for the market than the actual rate hikes. If there is anything that you're struggling to understand, let me know. Okay, let me just keep an eye on the so yeah, as I was saying, dots and the tone. Okay, so we have seen them warning that the fund rate forecasts are quite high and they need to be revised up. But what is key is to figure out whether they will hint for how long they're gonna keep increasing rates and how many. That's the key, the tone, what they will suggest. Are they gonna get even more hawkish than expected, or are they gonna try to calm down a bit the markets? It's all about the tone and all about any hint signals that they're gonna give us in regards to how long this tightening will for how long it will last, and how much they will keep rising. Because so far we know about 5.1%. Are they gonna give a hint? Are they gonna actually signal more than that? This is a bit unlikely, but actually it's not so unlikely, because Bullard mentioned that 5% is a minimum. So that's why I'm saying that the press conference might be the driver, the actual driver of the market. Because from the one side, we have the uber hawk Bullard saying that, you know what, 5% handle in 2023 is the minimum. Waller as well, so we agree with him. But 5% is already too high. So are they gonna Are they gonna agree with? Are they gonna signal something similar with Bullard and Waller, or they go in the other scenario and saying that okay, 5% is the peak, and we're gonna start slowing down by the end of the year, 2023, obviously. Okay, so that's everything that I had to say about FOMC. Hopefully, are enough. If not, if there's anything that you don't understand, let me know. Just keep in mind, okay, that any hawkish tone that could show that they are they are away from any moderation could add to the market, to the belief that the biggest risk currently is not tightening enough now, but for the next year as well, and that could actually add an even greater volatility in the markets, obviously. So let me just check the questions. Thank you. Okay, brilliant. Since okay, you know, I had to update you in regards to today's data as well. We had also inflation from UK, but you know what? I'm gonna do it while we are seeing cable. So please stick on the question box and below the comment section in YouTube, Facebook, LinkedIn, Twitter, any assets that you want me to cover. And based on the asset, I will try to brief you up also with the news that related to that asset. And no one asked about dollar, but since we spoke a lot and this is a FOMC day, I'm going to shift to dollar for now. And once I'm doing, I've finished with that one, I'm going to go to, okay, I think I missed Emma's question. So first come, first served. Emma asked about stocks for our, okay, dollar, and then I'm going to take one by one the question. So here is dollar. That must, this is a 1 hour chart in dollar. As a massive decline that we have seen yesterday. It was on the inflation outcome, okay, pushing down their asset to 103. Let me just put some lines on 103.50 territory. And that was on the aftermath of treasuries outperforming yesterday on the weak inflation. So weak inflation is positive. It shows is positive for the economy, for the US economy. Okay, so treasuries outperform. So as a consequence, we have seen a dollar drifting down to 103 because, okay, because so it came in contrast with the treasuries. It came against the performance of the treasuries simply because of the markets are expecting the FOMC, okay, but theoretically and traditionally, the correlation that we have between yields and dollar is positive. So the same way, if yields rising, dollar rises. The only reason why we've seen this sharp dip today, even though the inflation it was smoother, was cooler, is because there is some kind of a selling pressure ahead of the FOMC. So market participants are trying to push the dollar lower ahead of the FOMC. Is that clear? This is Stephen. This is dollar. This is dollar index 1 hour chart. Okay. Can I use the? You know what? I'm gonna put it on every time. I'll try this. Okay, yes, I will keep it on. So this is the dip 103.50. I'm gonna quickly put the daily, the 4 hour chart on because I want you to see. Here with this mess for now. Okay. Reason why I removed the Fibonacci's for now is because I want to show you. Okay. Second. I want to show you this. Oh, sorry. So I want to show you that the last, since the mid of November, dollar is forming a descending channel. You see that descending channel? So yesterday, on the release of the inflation, okay, you can see that it broken the middle line of the channel, extending down to 103 103.50 territory, okay, and remains below the midline with further downwards candles so far today. So there is still some selling pressure in intraday. You can see that from the fact that RSI and MACD keep negatively configured. If I just use my intraday exponential moving averages, let me just put that on. So, sorry, moving averages. I don't want to. So the 5 and 9 exponential moving averages, just to see whether this is running out of steam or not. I remind you, this is the 1 hour dollar. So, okay, they have flattened, as you can see over here. So for the time being, we're seeing that the bearish bias is running out of steam. So it's steady, it's consolidating for the time being with immediate resistance on these triple fractals, 1, 2, 3, 104 territory, round number. But that's the intraday, the short-term resistance. So what I'm trying to say is that the asset, it has been, and I will turn it to a daily chart because I want to show you some key support and resistance levels. As I mentioned, is in a downwards channel since the mid of November. Obviously, we had a big selling pressure, and in general in the final quarter of the year. You've seen that we had a big drift in October. Okay, and what is key is that it remained also below the 200-day moving average. So now we are in a daily basis, 200-day moving averages for 2 weeks now. So it's been to the downside since October, forming the last 2 months, nearly 2 months, a downwards channel. Is actually within it's moving within a downwards channel. So another bearish pattern and a bearish technical tool. And third has broken the 200-day moving average and is moving below it for the last 2 weeks. So it's clear that it has a lot of selling pressure still in the medium outlook. So 103.50, which was yesterday's bottom, okay, and is also a support level that hasn't been retested since June, okay, is a very important key support area for the dollar, because if it breaks, let me zoom in. Welcome, Emmanuel. So if it breaks, that could open the doors to 102 territory, and to be more precise, the 100 Fibonacci extension. 102 round number, confluence with 100% Fibonacci extension on this massive swing that we have seen in November. Now, this is for traders that more of a medium term. For intraday traders, obviously you need to get back to your 1 hour chart, 30-minute chart. It depends on your strategy that you're following and trying to figure out the immediate support and resistance levels based on your strategy, based on your time frame, and etc. So if I zoom in now, I'm back to the 1 hour chart. As I said, 104 remains the immediate resistance level, round number 104.09 to be more precise. That triple fractals is at 104.09 is the key, is the immediate resistance, immediate support 103.50. So a pullback and a break of 104 brings the middle line of the channel as the next immediate resistance level, while a break of it we could see the asset retesting the 105 level again. Now to the downside, a break of this level could indicate, just come on, come on. Sorry, zoom out a bit. So a break of 103.50, sorry, could pressure the asset further, with ATR in the 1 hour chart pointing to a 0.14 movement. So that was in regards to the dollar. So let me get back to the questions and start covering one by one everything that you need. So Emma is in a 4 hour chart for Dow and S&P for sure. Yes. Okay, let's start with Dow. Okay. Actually, Dow is, let me just, whoop, there we are. Perfect. In Dow, we are facing three levels that you need to keep monitoring. Okay, why I'm saying that? So we have a full recovery of Dow from September's losses. Okay, so this is the daily chart. I will come to the 4 hour chart in a second. Okay, I wanted just to identify the some support and resistance levels firstly. Yeah. So since the day that it managed to exit this drift, okay, is keep extending. Now I'm gonna get rid of the channel just to keep it clean. Now I've put on these three lines. The very first one, the 34,627, that one, it represents the first resistance. It's last week's top, right? That hasn't been broken yet. And also it's a resistance area that hasn't been broken since April, okay? And I'm gonna put another line on the highs that we have seen in the first quarter of the year. Okay, so I will change the colors as well. That one should be in red because it's a support for the time being. And that one, I will put it with dotted because the case that eventually this week or today, tomorrow, we see actually the asset keep extending higher, okay, above 34,140, okay, that level, this dotted line that presents also is a confluence of August peak, actually 1, 2, 3, 4, 5 months resistance. This 5 months resistance, 5, 6, no, more than 5, what I'm saying, wait a minute. So May, June, July, August, September, October. So 6 months resistance could be turned into support. Okay, this is just to have something on your at the back of your head. It doesn't mean that will happen, but if we see the asset appreciate further and extending away from this immediate resistance area, a 6 months peak, then this level could turn as a support level. Now the next one, the next resistance is the latest peak that we saw in November. The very next one is the years, should be actually, yes, years is years peak, 35,000, yeah, 300, more precise, let me be precise, 400, 3,400. So that's an area, resistance area over here. We need to consider that. Okay, here we are. On the flip side, support lies on the 33,420. You can see that it's a repeatable floor, right? 1, 2, 3, 4, 5 days in a row, then back retested back in the beginning of January. But since the beginning of January, the asset didn't manage to turn below that level. Okay, so that's our support level. After the asset fully recovered August and September's losses and sustains all these gains, even though is consolidating the last few weeks. But I want you to have a look on this latest daily candle, yesterday's one. We have a very, very large upper wick and a very small body candle. What this indicates, I'm gonna turn to cable as well. Don't worry about it, okay? What that indicates is that regarding the pressure, the push from the bulls to extend the price higher, sellers gain the control. You can say, but Andrea, you have a bullish candle. Yeah, but a very small body one with the bulls failing, because you see they reach as high as 34,900 something, but they eventually close very, very close to the open level. So that indicates that sellers are mainly in control. So let's stick to the 4-hour chart, like Emma asked. You can see that this is a pure price analysis. No indicate. I didn't use any indicators over here. So a bit of a ranging market. Okay, Emma, turn away from this upper level and right now consolidating around 34,000. We have a bit of something looking like an evening star, but it's not at the top of the it's not at the top of any trend, so it cannot be considered as a signal over here. So let me just, yeah. So, but the last two sessions completely are actually adding to the bearish pressure for Dow in this 4-hour chart, as we have seen a complete pullback, a bit of a correction, and then again to the downside, ready to break the 34,000. So 34,000 could be considered as a sign for a potential retest of this floor that we have seen for 4 or 5 weeks now. So a move and a break below 34,000 could retest this November's December floor. Okay, now quickly S&P 500, and I will shift quickly to cable. By the way, I was in 5 and 9. S&P 500, here we are. Very, very similar consolidation with the Dow. The asset, however, over here is still within a downwards trajectory. And let me put the price, actually, let me delete all the indicators just to clean all this. Okay, the reason why I'm doing that is because I want to show you that in contrast with the Dow Jones, so that should be a better. No, I didn't post that. That's a much better channel. Yeah. Yeah, much better. So March 2022. So in contrast with Dow Jones, S&P remains to the overall outlook. This is a daily chart, overall in a downwards channel, because in contrast with S&P, you can see that it posted a lower low. And you see this, the difference. Over here in S&P, we have a higher peak, higher high. S&P though, okay, keeps posting lower highs, lower highs, lower highs, confirming that it's still in some kind of a long-term downward trajectory. Now, it's holding the gains that we have seen the last 2 months. Okay, it's holding, so it's sustained some gains at the 4,000 territory. Okay, so let me zoom in. So here we are. Actually, that's a mistake. I need to put a vertical line connecting the last 3 fractals over here. Perfect. We can see that it looks like an expanded triangle. Flat floor, expanded. So higher highs in the near term with a flat support level. Okay, so what that means? It means that we have seen some kind of a near-term bullish bias, but just the same mistake as before. Here we are. Okay. We have, so that means in the near term, there is some bullish bias, but overall remains under pressure. So here is very close to the resistance, to the upper level of the channel. So this is considered to be a retracement level. Okay, so it will be key to see whether we manage to break it, because that will indicate that higher, another higher high, or whether it will go in line with the technicals and have a pullback and a retracement at that territory. So still within the channel, so that's a retracement level, despite the fact that we're seeing some bullish bias intraday, so the overlap doesn't really change. But what could confirm that it will resume this downwards channel is only a move below the nearest floor at 39.10. Okay, so pullback here and a break of that level could open the doors to the middle line, which is far away, 3600, while the break of that as well could bring back into attention the 3400 territory. Now, for our chart, as Emma requested, you see higher highs, some kind of an expanding triangle, peaked, reverted quickly. That was on inflation, pulled back, so that retracement level acted properly. I mean, pulled back with the asset finding a ceiling over here. So now all this uncertainty on this consolidation has to do with the anticipation of FOMC. So immediate floor that could trigger further selling would be the 4,000. Okay, 4,000 round number. So if that is breached, even prior FOMC or during the FOMC, so if it breaks, it moves below that, then the next floor, immediate floors, is this multi times fractals 39.36 and down to 39.10 territory. Okay, that's your immediate support if it breaches and breaks the 4,000. The upside, as I told you, the upper of the channel is the very first key resistance area, while if we see the asset extending above it, then you can use the Fibonacci extension in this case to figure out identify some immediate support and resistance levels. So that takes us to 40.90 and 41.90 as well. Okay, let's move on. Oof. Cable. Yeah, I'm gonna skip some questions, go to cable and then get back to you, because cable is very important as well. We have Bank of England yesterday, we had inflation today, so let's get back to perfect. So interestingly, let me just oops. So okay, that looks a bit messy. Let me clear a bit this mess. So, come on. Sorry, guys. Sorry. Give me a second. Okay. I have cleared the Fibonacci's for now, because I want you. That's a daily chart, okay? Martin, you with me? Can't post to some channel. Okay, this is GBP. Actually, I'm not going to type it since it's the question from Martin. So this is the cable in a daily chart. Now, why I'm actually emphasizing in the daily chart first, because I want to show you this potential cross. This is a 20-day moving average, simple one with 200 simple moving average. Okay, so there's no confirmation of them crossing, but tomorrow, day after, we might see confirmation whether 20-day moving average will cross above the 200, and that implies that signals that shows near-term bullish bias. We have seen anyway the asset to the upside for 2.5 months now. getting back to 24 territory, right? Appreciating to 2460 territory, 124.60 territory. Sorry, 124.40. Sorry, just to be precise. 124.40 from the 102 lows. So a nice full recovery since of July and July lows, of July drift of losses, to the upside for more than 2 months now. So a cross of the 20 above the 200 could just suggest that there is further steam, there is further room to the upside for cable. However, we have FOMC today and we have Bank of England tomorrow, and whatever the FOMC says today, it will affect the Bank of England. And why I'm saying that, so not sure whether I posted. I think I haven't posted it yet. I will post it. I'll post the article after we are done. If FOMC today remains remains focused, remains committed, steadfast in its fight against inflation, okay, that could put fresh pressure on dollar. Okay, so that means a potential pullback. Why is that? Because from the Bank of England tomorrow, even though we're expecting another 50 points hike, like FOMC, like ECB, etc. However, we are expecting Mr. Bali and his colleagues to say, you know what, the economy is not as pessimistic as the market is thinking. So to, you know, in the last report they did the same. In the last meeting they tried to criticize, they tried to they disagree with the market's views that economy is doing awful, so they try to go against this overly pessimistic feeling. Okay, so if today FOMC remains committed to fight inflation, and tomorrow we'll see Bali again and the Bank of England again saying that things are not as bad as market is pricing in, then that theoretically could pressure pound against dollar instead of boosting it. Is it clear? Hello from Zambia. So yeah, okay. Regards to if you face any and if you're struggling, let me know. Okay. So it's something that I'm explaining in my next post. It will be, I will post it after we are done. Okay. Yeah. So yeah, that could, as I said, could add some fresh pressure to the pound. So, but from technical perspective, okay, for the time being, we are seeing that this rally has still some further room to cover. You see MACD positively configured far away from zero level, RSI 68 and pointing higher, so there is no indication of a pullback yet. The asset is above all daily moving averages, and we are waiting to see whether we're going to see a bullish cross of the 20 from and the 200. So 124.40. So yesterday's peak remains our immediate resistance level, which if it breaks is bringing back to attention the May's peak at, let me be precise because I think I put it a bit, should be, yeah, here. Let me just be precise. 126.65. Yeah. So next resistance, we see a break of yesterday's peak will be at 126.70, while further appreciation could reach as high as 129 level. But this is a scenario for later. We need first of all to see whether this trend will keep rising, this rally will keep extending. Now, what else I wanted to say? By the way, the 129.40 that I put on is the 200-week moving average, just for those that are questioning. Now, intraday. Sorry, we missed checking the intraday basis. Are we okay so far with cable, guys? We are okay. 1 hour chart. You see, let's get those fast moving averages that keep pointing higher. We have a smooth upwards. So if I connect the fractals, connect the peaks as well, we have an ascending. You see how this is moving like that? Can you see me? You see? So posting higher highs, higher lows, MACD is positive. RSI, okay, struggling to break the 70 territory. It's a bit softer, it's a bit lower right now, but still, if I will help you. I mean, by connecting the lows in the RSI, you can get also an immediate signal over here. Because you know that if it breaks and extends below your trend line, could be a hint that it will depreciate. No, that was, yeah, it was. It could just. For the intraday traders and scalpers, setting some trend lines, guys, in your RSI, or depends which indicators you are using, it could be a helpful potential entry point, or actually an indication that, you know what, yeah, it might run out of steam, so it might be a pullback. So I mean, help you to decide what to do. But intraday setup and daily setup for the timing remains positive. So there is a positive outlook overall for cable. Okay. Yeah. Yeah. But as I said, the last few days, the last 2 weeks of the year, the end of the year, are crucial. So you need, okay, we're gonna do another live analysis next week anyway, but yeah, a pullback, continuous pullback away from this high, okay, could resume, okay, could signal a potential resumption of the nearly 2 years drift for cable. But this is there are a lot of ifs in this scenario, so just forget it for now. Not a lot of people asking for questions today. We have cover pound. Let's go to gold, because Michael and Armando asked for it. Gold has been really interesting lately, but there was a nice breakout. I don't know whether you missed that. It was a nice breakout back in October that indicated that it will appreciate, and indeed for 1, 2, 3, 4 consecutive weeks is holding gains since that massive jump massive jump that we have seen in October. But nevertheless, what we are seeing right now, so this is a gold daily chart, okay? It used to be in a downtrend for the whole 2022, but broken that downtrend. Now it's extending higher, indicating that maybe we have the end of gold's appreciation. However, we still expect, at least for the first half of 2023, further rate increases. They have already started pricing in. So we need to be careful. So where we're standing right now, we're seeing consolidation the last 2 weeks between 38.2 Fibonacci and 50 Fibonacci. So a floor consolidation around the psychological 1800s territory. Okay, regardless of Fibonacci, regardless of moving average, 1800s is a very important key psychological level for gold. So the last 2 weeks, the last 3 weeks is pretty much around that territory, okay? But up, doji, so far up, but we need to wait until this is over, the day is over, to see how it will end, whether it will be bullish, opening the doors to 1860, 1890 territory or not, okay, or whether that will be proven the retracement level of gold again, because as you can see, it's around psychological level, but also the resistance back in July. Okay, so, and MACD is still negative. RSI, it broke 50, but it's still very, very close to 50, it's 57. So the indicators haven't really changed the negative the negative outlook, overall outlook, long-term outlook for gold. So the outlook, the gold remains in a negative outlook in the medium and long term. So this week the week will be crucial because it will give us clues whether we're gonna have a reversal back down or whether we're gonna see it appreciated in the year's end. Now that's the weekly chart. So zooming into the daily chart, holding gains above 200-day moving average for nearly 2 weeks now, broken this latest fractal. Yes, actually they broke it. It is tested yesterday, but it closed on it. Today it remains below it. So we don't have we don't have let me clear a bit this mess. I'm gonna get rid of some and I will zoom in. So what we have, something like a hummingbird. So the best thing that you can do is find your immediate support and resistance levels. I will put this as a solid line. And the reason for that is because I want to show you that it looks like, come on, nice. Okay, is it clear? So consolidation, positive to neutral. You see, MACD is flat, RSI the same. So what we need is a confirmed breakout outside this triangle, above it, in order to imply that it could retest 1870 or even 1890. But this doesn't look to be the case yet. There is a lot of mixed signals over here. I'll put to the 4-hour channel to see what's going on over here. Okay, the ascending triangle, softer back to retest 1800s. MACD is positive, but not far away from zero. So RSI 58, not neutral. Stochastic are showing a pullback. So yeah, so a breach of 1800s could retest the bottom of this our trend line over here at 1783 intraday. So yeah, there's a lot of mixed pictures over here, guys. There is no further steam to the upside for the time being. Very mixed picture, a lot of pressure still. Everything really depends on the dollar. So, well, let's move on. Dollar yen. What we have over here, very interesting. Consolidation, nice floor. Confluence of this floor, of this support is there. Can you see that? July's bottom, Bollinger Band area, and 50-week moving average. This is the weekly chart. The weekly 50-week moving average is a line that was supporting dollar yen since for the last 2 years now. Okay, so the asset is retesting it for 3 weeks in a row. So you can understand that this is a very solid, strong support level. So I'm just pointing it out because in the future, if something happens and you break it, that immediately open the doors to far, far away 120, 117 territory. But that's in the long term. Now, day. Okay, so negative bias from MACD. Okay, that's ignore stochastic from now, is for the intraday analysis. RSI very close to the 30 territory. This is something that is keep going on for 2.5 months now, consolidating close to the 30 territory. So both MACD and RSI are on the same side as the market. So in a pressure, selling pressure. Down, 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 a bit of a recovery, some kind of a correction, down again. So drift, recovery, drift, correction, drift, correction, down. So the dollar yen remains under pressure. Okay, remains under pressure. So, however, the floor, the immediate floor is nearby, and is this confluence of Bollinger's, daily Bollinger's, and the latest low at 133.60. So this is the immediate support level for dollar yen. On the flip side, on the upside, we need to see a decisive pullback, a decisive recovery above 140. 140. Okay, 140 at least. 140 round number, 38.2 Fibonacci level, latest up fractal. Okay, but it remains overall under pressure. Now, intraday. Here we are. Drift yesterday for inflation, tried to recover, didn't manage, resume losses, retested again yesterday's floor, trying to get back to the Bollingers, failing though. A lot of bearish bias. Stochastic, it posted a bullish cross, but you see how weak this is. It's very, very weak. So bearish bias prevails intraday as well. Guys, I cannot see any further questions, so I will finish with pound yen. If there are no further questions, neither in the social media or the GoToWebinar. I can see that no comments in the GoToWebinar. So hopefully this is good and bad. Hopefully, as I'm here to help, this is your session. If there is anything that you want me to change, anything you want me to explain, like, these are sessions for you. So just tell me. Okay, pound yen. One of the most volatile currency pairs. Okay, take care. Pound yen. Intraday, it was in a ranging market, broken it though 2 hours earlier, 2 hours ago. Okay, broken it and turned below it, resuming further losses. Again, MACD negative, RSI, you see, keeps pointing downwards. RSI close to 30. So there is a lot of actually pound yen, pound dollar. Pound yen is negatively configured. Is seen from a technical perspective that is driven by bears, by sellers intraday. Okay, so a breakout of this latest floor could extend further decline for the asset. Okay, and that could be, oops, wrong. 166.40.50. So based on our ATR, so somewhere here. So the ATR is let's say 0.29 performance. So here, further that could go down to 160, 116, 166, not 16. So these are the immediate support levels in the pound yen. While to the upside, the top of the range over here, the 167.75. So late this fractal confluence with upper Bollinger and a bit higher than the 50-period moving average is the key resistance level if we see a rebound. If that breaks, then it could turn to Monday's peak. Sorry. So that's pretty much it, guys. If there are no further questions, we'll call it a date. Okay. I'll wait a bit. I will just say, let's go to yen. Okay, again. Okay, I did yen, but maybe you have just joined, Hillary. So I will do it again. Yes, sure. Pound, dollar, yen. So I was saying, I said a lot about yen. So Hillary, keep an eye. Have you seen what I have posted over here? So the asset had a sharp correction the last 2 months. Okay, it was in a sharp rally, but it had a sharp correction the last 2 months. Settled though above the 50-week moving average. This is a weekly chart. This area that I have highlighted over here is a very, very strong support level. It's the confluence of weekly lower Bollingers, 50-week moving average, which is a tool that is supporting the dollar yen for the last 2 years, and also the confluence with the latest weekly fractal. So you understand that this is a very, very strong, solid support level for dollar yen. If in the future, in the next few weeks, if this breaks, then that will be one way, a free fall to 200 territory, 200-day moving, the weekly moving average, the 120 territory, the 118. But that's a long-term scenario. Okay, so the reason you see, so very important support level. Now, for the time being, as you can see, it's really consolidating. I have shifted to the daily chart, consolidating between 133.60 and 138 territory. But what do we have over here? Drift, correction, drift, correction, drift, correction. So we are seeing some kind of a new near-term, medium-term downtrend. So the break of this latest bottom, 133.60, dear Hillary, who initially opened the door to what I said earlier, the 130 level. Okay? Because we have a lot of selling pressure in the dollar yen in the daily chart. So bears are in control since October. MACD negatively configured, RSI's at the close to 30 territory. You see it's consolidating for the last 2 months close to the 30 territory. So agrees with this price action. So negative, negative, negative. So for the time being, the medium-term outlook for dollar yen is negative, with the immediate floor at 133.60, which if it breaks, it could breach the, it could retest the 130 territory. Now, to the upside, only a pullback and a breach of 140, which is a confluence of 50-day moving average, 38.2 Fibonacci level, our latest resistance back in November. Only an attempt, a retest, and a breakout of that that territory could turn attention to the middle of the drift at 143 level. Okay. Intraday, last but not least, we're seeing a resumption, as you can see in this 1 hour chart, of the decline. The asset extended today, posting a new low at 134.50, breaking yesterday's bottom. MACD negative, RSI the same, holding close to 30 territory. Stochastic posted a bullish cross, but you can see that this is very, very weak. Very, very weak. So, yeah, negative bias intraday as well, with 135.75, the next resistance area, and 134.50 remains the floor of the day. If it breaks, then another 30 pips movement could be seen. So somewhere here, 34.13 and 133.60. Okay. Yeah, a lot of technical bearish signals from a technical perspective, Hillary. Yes, you're right. So negatively configure MACD, negatively configure RSI, new lower low in this 1 hour chart. RSI stuck at 34 since yesterday, unable to show a slope, a sharp slope higher. Stochastic the same. Yeah. So guys, I'm gonna call it a date. Welcome, Ginny. Yeah, I'm gonna call it a date. Keep an eye. As I said, tonight is a very, very important FOMC meeting. It is a very volatile event. Tomorrow also the day is packed of central banks, so that will add further volatility to the market. As I said, focus today is not so much on the size of the tightening, but is mainly on the dots and the tone of the FOMC. So what we have seen so far this week is dollar under pressure, is commodities moving higher, like oil, for example, gold, for example. Yeah, so that's pretty much it. Thank you very much. I'm gonna call it a date. It's been more than an hour. So I'll see you again. Maybe tomorrow or Friday, not really sure. But anyway, you are getting, if you are subscribed to our YouTube channel, you're getting alerts when we are going live or not. Or if you have downloaded the HFM app, you're getting a push notification over there for every single live event, commentary analysis. That means you're present. So either subscribe in the YouTube channel or enable your notification in the HFM app in order to get alert for every single event that we are hosting. So thank you. Take care. There will be massive 2 days, today and tomorrow. So take care and see you again later on. Bye bye.